So welcome to the channel, Asset Accelerator. What we do here is we talk a lot about accelerating our assets. A lot of people are 45 to 65 years old, make a high income, but once the income stops, everything stops, right? And so what we have to do, if our 401k is not quite up to speed yet, is get some cash flow. One of the ways to get the cash flow is rental real estate. One of the ways I really like, as a matter of fact, because you get the tax deduction, you get tax breaks, you get the cash flow, you can push that up with inflation, maybe even higher, and you get the appreciation. So I want to talk about that today because really, is there a housing crash coming or is there not? Because we know a lot of real estate investors were left holding the bag in 2007 and 2008 when the housing crashed, and so did rental prices with it, rental rates. And there are a whole lot of headlines today and YouTube videos and so-called experts predicting the same thing's going to happen, a housing crash. So if that's going to happen, should you invest in real estate right now? Probably not. However, all of these people are short on one thing, and that is data. So there's one YouTube person who's going around from podcast to podcast and interview to interview who keeps saying the same thing. Well, I drove around Nashville and it feels like there's too much construction going on. Well, I get that you're very emotive, but I don't think we should make investment decisions based on emotive only, right? Emotions only. I think data is the key. And once we get enough data, and I'm going to share 3 points of data here, and once we get enough data to make a solid decision, I don't think it's paralysis by analysis is good. I think it's time to just take action. Hopefully you agree with me. But let's look at 3 data points. One is household formations. How many people are buying homes or going to be buying homes or moving into homes in the near future? The second is inflation, and real assets tend to go up with inflation. And the third is just local. Real estate is one thing, it's local. And so you really have to know your local market. And I'm going to look at my local market, and you can look at yours. So the first thing is household formations, right? What is that? Well, it's really simple. It's people coming of age, maybe getting married, maybe having a child, and it's time to move out and form your own household, right? You buy a house, rent a house, whatever it may be. But it's funny how kids on the way or just arrived facilitate that. They make that go quicker. And what we've got projected as of the end of last year is 1.9 million new household formations. Now, the average household formation takes place now at about 38 years old. So we've got a growing number of 38-year-olds because 38 years ago there was a growing number of births. And that's projected to be at 1.9 million and growing a little bit over the next several years. So the demand is there as far as that goes. What about the other side of that? Supply. Well, you can see here from the St. Louis Federal Reserve chart that we are expected to have about 1.3 million new constructed homes coming online, coming out of the ground and able to be moved into, right? So you got 1.9 million household formations coming, 1.3 million new construction. We're short. We're short housing. And if you're looking for a house, well, that's not really good because home prices are up and I don't think they're coming down. But if you're renting a house that you own or about to buy, well, that's a good thing. It means demand will outstrip supply for the coming future, and that helps stabilize and increase prices so you gain equity, but more importantly, cash flow as well because the rents will be going up accordingly. By the way, I don't really have a data point on this, although we could put one in. We saw a lot of new construction of multifamily, of apartment buildings before COVID and even during COVID. And that, with the high interest rates now, with the raise in interest rates, has really slowed down. So even that part of the market has slowed, and it's going to take several years to catch back up there and meet the demand. Okay, so supply is not nearly meeting the demand, and that's a good thing if you own or are thinking of owning investment real estate. But what about the other side of the coin? Inflation. It is said that owning real estate increases your net worth because, in part, there's appreciation, right? The home is going up in value. But is it really? I really like this chart, the home price versus the money supply, M2 money supply. As money supply expands, real assets expand with it because, in my opinion, the better way of saying it is not that home prices are going up, but that the value of that asset, that is the land and the house on it, is keeping up with the increase of money supply, right? As money supply increases, real assets are just keeping up with it. We pay more at the grocery store because that costs more. We pay more for cars because the components cost more, but real assets, real estate included, are just keeping up with it. So it costs more dollars to buy the same asset. $1 in 1998 is worth exactly 50 cents today. But or a better way to put that is it costs about twice as many dollars to buy the same asset today, the hard real asset like real estate, as it did in 1998. And that will continue. So I really like this chart. Take a look at it. You can see the only anomaly where home prices and the increase in money supply diverged was right before the housing crash, and we had a bubble, right? And there's a lot of reasons for that. We know the liar loans and all that stuff. Right now, we see a little bit of dip in the broad money supply, and that's projected to continue through the end of this year into next year. So we may see a little brief dip in home prices as well to match that. And that's okay because the CBO, Congressional Budget Office, projects we will have a 30% increase in money supply by 2035. So over the next 10 years, money supply will increase 30% per the CBO. CBO usually undershoots things, so maybe more than that, I would suspect. And home prices, following the same trend, should be up about 30% in 10 years. So a $500,000 home today will be worth $650,000 by 2035, in that range. So I think this is one of the most telling things and why you should buy real assets and hard assets, because it keeps up with money supply. And by the way, as inflation takes hold and keeps growing at, the Fed's target is 2% inflation, what happens? Well, rents go up with inflation. So you get a 30-year fixed rate, that part's fixed, but your rents keep increasing over time and your cash flow increases over time. I like this asset because of that, because of a lot of things. And by the way, this has gotten better. Real estate ownership has gotten even better with solidifying some of the tax breaks that would have gone away in this big, beautiful bill that just passed, right? Now, love it or hate it because it does add to the deficit, that adds to the money supply. And so you got to be on the right side of things in order to play the game, right? And what Trump is trying to do there, and Congress backing him up, is start the move from a almost purely consumer-driven society to a producer and investor society. At least to balance that out a little bit. Do you play along with that? Yes, I think you do, and you'll be better off and wealthier for it. Now, the third thing, all real estate is local, and we know that. So should you buy right now and right where you are, you got to do a little research there on your own. But I'll share with you how I researched the Charleston MSA, right? Charleston, South Carolina is where I live, and that broader market is, I just looked at population growth. No one can know exactly how much the population will grow in any given area. However, we can base it on what's been happening in recent years and project out. And you can see here, the Charleston MSA has grown by 8.8% over the last 4 years. South Carolina in general has grown 7%, so we're outpacing that. And the U.S. in general has grown 2.6%, so we're way outpacing that. Will that continue? Well, I just looked at how much industry is moving into my local market versus exiting the local market. And certainly there are some downsizing. There are a few, but there are many, many more that are either growing or expanding into this market. And where there's jobs, there's also support businesses around those jobs, and they create more businesses, and everyone who works in every one of those businesses needs a roof over their head, right? and that is good for you and I. So, will home prices drop? I mean, look, there can always be a black swan event, but by definition, that is a black swan event, an unforeseen and unforeseeable event, unpredictable. I like to put it this way. Pessimists sound intelligent. They do. But optimists make money. Because how many times in our own life have we imagined this worst case doomsday scenario? Oh, it's going to be terrible. It's going to happen. You can create your own scenario, right? Whatever that may be. You're walking into a meeting, and what if they say this? And what if they just laugh me off? And what if they throw me out? And whatever. And that never happens, right? Because the worst almost never happens. And it's the same with housing. So can we foresee, will there be something unforeseeable that will crash housing? Certainly that's a possibility, but I wouldn't bank on it. And if you want to sound really intelligent and be a pessimist, be my guest. If you want to make money and be an optimist, here's some of the numbers and some of the research. I think it makes sense. And I hope that you buy real estate, own it for a long time, rent it well, maintain it well to keep the value up. And I think that will add to your cash flow and get you ready one step closer to being able to one day cut off your earned income and start to live on your investment income. So best of luck accelerating the assets that you have by investing smartly and creating some cash flow. Until next time. So if you like this video, be sure to like and subscribe because videos come out every Friday, and join our Facebook group for what's upcoming and some great discussions on asset acceleration. Hope to see you in both. See you next week.